Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn & Associates with your financial market update for this Tuesday, the 27th of June, 2017, just getting on to 3:50 p.m. Central Daylight Time. What a day. We saw now that the president's health care bill is being postponed to even bring it to the floor until after July 4th. Now, exactly what day, nobody knows. There's going to be all kinds of politicking, and you owe me points, I owe you points, you can imagine. We've got that cyber hack again going on. I think they're calling this one GoldenEye. Remember WannaCry a month ago where they take control of a computer and you had to pay $300, otherwise your files, they were encrypted and you were out of business? Well, it's here in America. Not big yet, but it's here. It's certainly all through Europe and it's spreading through the Americas right now. And again, the same people or different group, they want payment in Bitcoin, $300 a computer. We'll see what that does. The other event of the day, Mario Draghi apparently changing course a bit and saying, you know, if the Eurozone continues to grow as it is, tapering is on the table. Pullback of the bond purchase program. That sent the euro soaring, the dollar dropping rather dramatically. So what do you do with this? Well, I'm viewing the stock market as this is summertime. A week ago, we started seeing the tech stocks have a problem. We said at first maybe it's a rotation. Well, it appears to be a bit more than that. It could be an actual correction of sorts taking place. May not go down very far, and I'm going to tell you why. Even though the VIX is up like this, if you watch the amount of VIX puts that have been bought over the past 2 weeks and what they've done, it's monstrous in size. So I think there's protection out there. I was just on literally 10 minutes ago in Australia on TV talking about that a little bit. But let's take a look now and see what the charts are doing. Let's go to the NASDAQ. So here on the NASDAQ, you've got the pattern of lower high, of a market that's making on a closing basis, lower close and lower highs. You can just visually see it. The market's in something of a downtrend. When we take a look at the daily bar chart, look at how yesterday the market got up here. Remember I said, will it get to this? It looked like a failure yesterday. And as soon as you started down this morning, it just kept going. You opened about steady, and then you dropped right into the close on the market. And the market knew all about the big fine on, I think it's Google, $2.7 billion, huge. The market absorbed that. Remember, it opened steady and then dropped. So not a big deal as you see it, but it's a correction. And when you get corrections, you pay attention. The whole thing is centered around this 18-day moving average of closes. Now that the market's finally getting away from that, the question is where's support? One area could be the 100-day average at 55.25, let's call it. It's 55.24.98. The other number in front of that one is the lower Bollinger Band. Now remember what Bollinger Bands are. They're an algorithm designed to keep the market trading within them 95% of the time. So as I teach in my charting course, the first challenge is support. Challenge up is resistance. It can change its breadth if it runs that Bollinger Band, but it's often then accompanied by a slow stochastic reading that is locked in and embedded. This takes over. This is the strongest reading you can get when that occurs, be it up or to the downside. So what we have right now is very simple. We have a market that's got no trend on the swing line. You have a higher high and a lower low. You have a market that's approaching first support at 56.41. and a half, 75, right in that zone, and momentum is still pointing down. Correction time of sorts, not a crash, a correction. The Dow Jones, on the other hand, also has the pattern. Now, take a look at today's low, 21,265. Previous low was 21,282. So we got the higher high and now a lower low. The market's trying to hold the 18-day average, but you've lost a trend. The swing line is now not trending. You're back to neutral in the 18-day average. Your momentum is pointing down. On the S&P, the market went from getting up to the upper Bollinger Band down to the lower Bollinger Band in all of 48 hours. This is a narrow band. The market is spinning and again not trending. You got the higher high, lower low. Momentum clearly to the downside. This will not stay this thin. So now the question for you is, does it break out to the downside? Does it try to get back up through that upside? Right now the bears have control of the market because with the delay of the House, the Senate not moving the health care forward, you got to start thinking. The last thing the president's got going for him is, if he can't get this, can he get the tax plan going? If he can't get either going, how much of the stock markets, U.S. indices, have built in the advantage of lower taxes? Something to think about. But it's summertime. In summertime, this is very typical action. In the Russell, you've got a clear pattern of lower highs, lower lows. That's a trend. The market is having an outside day down. That is bearish. Unless today's high is taken out in the next 48 hours, this is a real reversal, and it could mean you're going back to this 1390 level, and momentum is pointing down. This is the most bearish of the charts at this point in time. In the VIX, we have gone for all purposes from lower band to higher band and still very much stuck sideways. How have I been telling you that each day? Other than this one aberration, you've really just been stuck here, and you see how clear that is in this period. Markets don't stay stuck forever. And when they break out, it can be violent the longer they've gone sideways. That's all I can say. In the bond market, you lost your uptrend today. Now, if I take today's action off, you had higher lows, higher highs, embedded reading. What you don't want to see is today's low taken out, but the real key is to keep the embedded reading. You lost it intraday and you took out that low. You went right back to that 18-day average, that line in the sand, and the market stopped there. The trend to the upside has ended. It's got more to correct if it's going to get out of this overbought condition. And that's what happens with an embedded reading. If it was bullish, it leaves the bullish and becomes overbought until it becomes neutral. It can also try to re-embed again, but that's the procedure that it goes through. In the 10-year notes, you have a pattern of a higher high and a lower low. This market wasn't as strong as the bonds, but that's the curve yield at work. And you fell back to the lower Bollinger Band, and magically that stopped the decline. And the market's now already in oversold territory. Doesn't mean it can't go lower, but if you're going to play these bands, this is where the pros are taking money off the table. Dollar index, with all the bad news, where do you think the pros, I think, what I teach in my course, should be taking money off the table if they were bearish? I'm not saying I was or wasn't. Immaterial. You get out when you first attack it there. You get out when you attack it there. Do you have to take all your position off? No, but you got to take something off, because often you get up to it and you turn away from it. So you got to always be careful. Momentum is pointing down, but you're not trending. You're still very much caught in the sideways action in the dollar index. The euro's the flip story. It decided to go to the upside, went up, and closed, from the looks of it, over the upper Bollinger Band. That's the first sign that maybe it's going to try to push that band out further. It doesn't have a good pattern. It's got a lower low and a higher high, but momentum's up, bias is up because you're over that number. Will you be able to stay over that Bollinger Band and push it higher the next day or two, or are you going to be able to just reverse back down? You got to pay attention there. British pound. The pound today got up high enough where now you got a higher high and lower low. You're out of any type of trend that you had, because you did have a downtrend, but you also hit the Bollinger Band, and that's where I think the pros are taking money off. Now the question is, does it fight a battle at the 18-day average? It's got upside bias, and it's got, from this market, momentum that's pointing higher. Japanese yen, a flip-flop to the bear side. In fact, everything in Asia, all the Asian currencies, I'll call the Aussie dollar in the Asian family, the New Zealand dollar, they were all under pressure today. Lower highs, lower lows. And it's interesting because Chinese corporate earnings came out very strong. So the corporations there are doing fine. As you look at the market, it's starting to ride the lower Bollinger Band and trying to embed. This could become a bigger play to the downside if it keeps doing that. Crude oil market, well, we can see it's up 35 points. Now, it was up a lot more than that. I have not seen the API number yet, but it could not have been a great number. It's not enough to break the market hard, and you got to remember on this market, one of the reasons the market tried to rally today had to do with the fact that as we're moving in this marketplace, Rosneft, the Russian producer, big problem of oil, their computers were hit. Maersk, the big shipping container company, they got hit too. So I'm just looking to see where the markets go. If you're hearing that noise, it's my phone. I guess I could grab it and turn it off right now so that we're not in any trouble there. Okay. The next thing that I'm looking at is nat gas. Market's got a lower low and a higher high. Momentum is picked up. The market is through on the downside, and it ended right there. Isn't it amazing how these Bollinger Bands seem to fit in nicely? I love when they do it, and I can teach you how to do this in a moment. So let's talk about that. You know, I'm going to be doing my videos tomorrow, and then I'm gone Thursday, Friday, and probably Monday. And my discount on my course is going to end at the last trading day of the month. So let me talk about that for you. My charting course, it centers on 5 indicators. You only see a few of them here. There's more indicators. It also has different what I'll call things that I've learned over the years. They're not trade secrets. They're things I've learned. Inside days, outside days, how you work with them, the secrets that I've learned in slow stochastics, Bollinger Bands. And I've done this a long time. So I try to teach that. Now, I vary my courses. Over the years, I've done probably 6 different types of courses. The last one I did was this December. I released it for Christmas at a price of $69.95. In that, you get 6 hours of video. So you get about 54 videos. They play online. There's no DVD or any of that necessary. You get charting software. Let me explain that part of it. The charting software value by itself is $99. You get it thrown into the course. What else do you get? You get access to my market research, a $60 value for 30 days because you need that. Why? What I do in the course is, what you're seeing are parts of actual PowerPoints that I use to teach how window envelopes and other things work. Then I take you out of the PowerPoint in another chapter, and then I walk you through a real chart. Then, in the mornings, because that data, no matter what I try to do, I recorded it back in 2016 as we came into the end of the year, I bring you to today, and with the graphs here, I bring you up to real charts as they're going, real time, and I walk you through each one of the indicators and how I'm applying them, what I'm thinking the pros are doing, why they're doing it. As I said, the course started at $69.95. It's up retail to $99.95, but for the month of June, if you buy the course, put in the word IRA20. Doesn't matter if it's all caps or not, but all one word, IRA20. The 20 stands for a $20 discount. The course is then $79.95. Get $165 in value from the charting software, the research, and then the course, all for $79.95. I don't think you can beat that. How do you get it? Call us at 866-973-2077. My staff will work with you. You can go online on our website at www.iraepstein.com. Go under the word education, read about it, and everything's there. Remember the IRA20. Or you can click right up here if you're watching me on YouTube, and from there, all that you need to do is that'll take you right to the page. Click that icon. You'll end up where you need. I'm Ira Epstein. Hope you take advantage of it. I'll see you tomorrow, and then I'm going fishing. Take care now.